afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets are off the day's high but continue to hold on to gains. The Nifty trades above the 10,100 mark. Nifty Bank is the only sectoral underperformer in trade today. Cipla recovers from the day's low after the company clarifies that the observations issued by US FDA for its Goa plant are only procedural in nature. Canara Bank is the top laggard on the Nifty PSU banking index after the CBI names its former chairman in a bank fraud. The stock has shed close to 7% in the last two trading sessions. And Hindalco is among the top gainer on Nifty despite Morgan Stanley downgrading the stock to equal weight and cutting its price target.
Those will be among the top stories that we'll anyways track during the course of the show as well. Thanks for tuning into Countdown. My name is Neeraj Shah, and we are looking at the markets coming off a little bit from those highs of the day as well. No alarm bells, but flat as flat can be. One would have hoped that after the days and days of cuts that we've seen, when we finally have seen a bounce, it would have lasted and taken further, as we saw last Monday and Tuesday, where in the market stage, a bit of a pullback. Sadly, that's not to be the case. 10,116 currently. Just bring up the European markets and bring up what the Dow futures are doing before we dwell into what's happening into individual pockets as well. A fair bit of green, muted, but a fair bit of green across the screen. FTSE, CAC, DAX, all of them trading about 0.25% higher. And the Dow futures, after the carnage yesterday, and after the cuts yesterday, let me put it that way, are trading flat in the session today. The heat map will show you IT and metal names looking fairly strong. So Techam up about 3%, Wipro about a couple of percentage points. There is Hindalco from amongst the metals pack. TCS is up in trade. HCL Tech is up about 1% in trade. And Tata Steel about 3.5%. A bit of a bounce that is coming in for stocks like Eicher, Bharti Infra, as well as Bosch. So there are certain names which are playing a bit of a bounce back as well. In the loser side though, we have a few heavyweights. Reliance Industries, HDFC Bank among stocks which aren't doing the best. ITC is lying absolutely dormant. ICICI Bank is down about 1% as well. And the oil marketing companies continue to languish. Must say, lastly, the market breadth will come up on your screen. Hasn't looked very, very positive. Marginally in the red at about 130, and I don't think the advanced decline ratio which will come on your screen is looking any different. So in fact, it's actually okay, it is looking different, it's widened a bit, but not in favor of the advances. So the market breadth continues to remain slightly wobbly. I'm guessing it's getting reflected in the liquid universe as well, Navneet?
That's right, Neeraj. We're off the day's high for both the benchmarks as well as the broader market indices. And even if you look at the F&O side of the story, at every pullback in the last few sessions, we've seen some bit of short positions coming around the higher levels. So in the Nifty futures, let's just pull up that. That's going to tell you if there is any sort of OI buildup that has been seen in today's trading session. So it's actually been hovering around that mark of 3 to 4%. But what I want to highlight is the premium. That's come down from 28 points yesterday to nearly 15 points. And that's the only live indicator, remember, you have in a market, which tells you that maybe on the pullback that we've seen at higher levels, there are some fresh short positions being created for Nifty futures. Bank Nifty, that's the one which is actually dragging Nifty also lower in today's session. And today is the day when the private banking stocks are, I guess, trading a bit weak. So the Bank Nifty futures, which have been witnessing fresh short positions in the last 3 to 4 sessions. So the open interest is still higher, about 5 to 6%. Let's just pull up the Nifty private banking index. I think that's the one which has seen mild bit of cuts, and I think it's the heavyweight HDFC Bank, which has nearly 10% weightage, is weighing on both Nifty as well as Bank Nifty. Let's look at the options data. The options band so far has been suggesting that the near-term trading range can be between 10,000 to about 10,250. But 10,000, remember, that's the mark which is going to be very, very crucial for this March series as well. The overall open interest concentration on the put side is definitely on the 10,000 strike. But after today's trading session, the kind of writing which has come in on the 10,000 put, now the 10,000 put strike stands with maximum amount of open interest. That's nearly 73 lakh shares. So if that gets breached, remember, there could be more downside, because then these put writers will start unwinding their position. But so far, call writing on the 10,100 strike has been seen. Just two stocks, NIT Tech, where profit booking was there in the last two sessions, and around the 900 mark, I think there is some buying which has come back because the open interest has surged quite significantly for NIT Tech. 2.5% higher, snapped the two-day losing streak, 27% higher for March futures in terms of OI addition. Jindal Steel and Power, the metal stocks which were reeling under pressure, have bounced back. This counter has gone up on high volumes on the cash side as well, 5.5% for the cash for the underlying stock. And the March futures of Jindal Steel and Power have seen some bit of open interest addition, 9%, which is telling you that there are fresh long positions being taken in today's session for JSPL.
Well, let's put all of those questions and more across to Ajay Bagga. He's Executive Chairman at OPC Asset Solutions, joins us right now on the show. Ajay, good having you. Thanks so much for taking the time out. I must say you've become a lot more active on social media than earlier, which is always good to get your views. Just wondering, global markets at that, seem to be on tenterhooks ahead of what would be Jerome Powell's first Fed meet. Do you expect anything extraordinary or out of the ordinary out of it, or would it essentially be 25 basis points hike and comments which will indicate neither too much of hawkishness nor too much of dovishness? And how would global markets react as a result of all of that?
Yeah, global markets, Neeraj, have factored in 25 basis points, which seems to be a done deal. What markets are also factoring in is more hawkishness with 4 rate hikes this year being announced. I don't think it's still too early in the year. 2 data points which are mitigating against the Fed coming out and laying out a hawkish view of 4 rate hikes. One is the retail sales in US have fallen for the last 3 months consecutively. So that is pointing towards flattening consumer sentiment despite the tax cuts. So tax cuts, one would have supposed that consumer sentiment would be very buoyed by that. That is not happening. The second big thing is the Philadelphia Fed first quarter GDP estimate of 5% has been brought down to under 2%, which is not good news. So overall, added to the 2 weeks back wage data, which was not very high, which was below expectations, the wage growth data. So you're not looking at a very high inflation risk. I think the Fed still has time to hold on to a 3 hike year, and they will say, we'll look at the data. We are worried about the fiscal deficit. We are worried about the tax cuts. What impact will it have? Will there be a bounce coming to the revenues? Third, they will say we are worried about the trade wars. If the global trade starts going down, it will have an accelerated impact, and also protectionism will lead to higher costs for the US consumer and could have an impact on inflation. So those are the 3-4 big messages that we are looking at. We're not expecting more than a 3 rate hike right now by most of the members. Market will probably bounce based on that Wednesday night for the US, Wednesday evening for the US, and Thursday morning for us. That's my best guess right now.
Hi Ajay, good afternoon. Well, point well taken, because I guess this time's rate hike is largely priced in. What's going to be in focus is the undertone which we get to hear this time around. But talking about the Indian markets, what according to you has spooked the Indian markets, which have corrected nearly 10% from the top? I know there are confluence of factors which we can highlight, right from the budget, LTCG being introduced. You've also had the PNB fraud case, which has dented the sentiment in the market. What is it according to you? Because, you know, a lot of market experts that we've been interacting with, they've also highlighted that they expect some bit of recovery to come by in the month of April when the new financial year starts.
Yeah, absolutely. See, till March 26th, I'm out of this market. I'm sitting on roughly 60% cash. So from 20% in January, I kept raising cash because the budget was lackluster. Moment the long-term capital gains came in, it was a no-brainer to tell you that the mid-cap and small caps will see huge sell-offs, because people are sitting on 10, 15, 20x kind of gains. Of course, Jan 31st is grandfathered, but against what was told in 2004 when the capital gains was abolished and STT was brought in, STT was not abolished this time. So the political masters and the bureaucracy can do anything they want with the market. You had a senior bureaucrat coming and saying in the stock market, money is just made without any work, it's a lazy money. Now you look at, I don't think at this rate the government will make its 20,000 crores next year on capital gains. You can see what's happening in the market. This selling will continue till March 26. What is interesting, I was noting the top 100 stocks volumes in the cash market. Those are running at 4 to 6 times the average volumes of the last 6 months. What that is really showing is people are booking their profits. They'll probably start retaking those positions in April. There is very little trust on the government on what they will bring out next year in the budget. And my own understanding would be that this 10% capital gains tax goes to 15 until it hits a 20% kind of rate and goes near the median income tax rate. So people are taking this window to sell off. Second is the political situation, which again, I think it's more sentimental. There's no fear of this government falling. We have this government in place for a year. And frankly, whatever the color of the government, the basic economics will stay the same. Market will really be driven by the global sentiments, global flows. And then unless it's totally a communist government, which comes and nationalizes everything, which doesn't look a very high probability, maybe 1 in a billion kind of a probability. So it's more sentiments, the political sentiments. It's the technical demand supply, more supply coming in the market. Third, the DIIs have not stepped in. If you see across February when the FIIs were selling, DIIs were buying 1,000 crores, 500 crores every day. We have been seeing a consistent selling from DIIs. Now the street word is there are dividends being offered in the mutual funds, and there's a 10% dividend tax coming from April 1. So before that, you will see a lot of dividend distribution from mutual funds. They are creating space for that because you can pay dividends only from realized profits. So that is being booked. That is another street rumor that's going on. We can't get a confirmation, but we are seeing dividend announcements starting. So it's probably true. So come March 26th, when the selling has gone, I think 27th onwards, you could see some stability in the market. Of course, the global sentiments have to be good as well. So relative underperformer, oversold market, I think we are setting up nicely for an April bounce is what I would really look at. And we are well positioned to benefit from that. I would definitely be allocating April onwards into this market.
Ajay, you're suggesting you will expect a bounce back in the month of April. For the year 2018, when political stability now becomes a very, very important factor, because if one has to look at the rally in 2017, it was not about earnings growth. It was only about global liquidity and the political stability that was seen in the domestic market. How much of that do you see impacting going ahead in 2018? And even if we bounce back from the current levels, do you think we can take away all-time high levels that we've seen at the start of the year?
Yeah, definitely. Again, what is coming out counterintuitively, when political sentiment is spoilt, like right now, what are we seeing? FIIs should be actually selling. Political risk goes up. They should be pairing their positions. But we have been seeing FII buying coming in. So I think this political sentiment, we tend to look at it much more. I have been selling this market right when it was opened in '94, when we had to point out India on the map to the investors, and we had to take company by company, take the managements to FIs, invite them, and there was hardly anybody knowing, and there was no electronic trading, no electronic demat accounts. In that scenario, we have sold India and got FIs in. So just one election, yes. It's a major election, national election. There'll be a lot of sentiment around it, but I think that's more local. When you talk to most FIs, especially the pension funds, institutional investors, the long funds, they are seeing the Indian growth story. How much lower does it go with a coalition government? How much higher does it go with a single party government. We have not really benefited by a single party government, unfortunately, because of the structural reforms that were undertaken. But that set a base for an economy which will grow very fast over the next 3, 4 years, 5 years, 10 years. I think that's what the longer term investors will look at. But you're totally right. The political stability factor will be used to explain a lot of the market behavior. I think the bigger issues are elsewhere. One is the global liquidity coming off, normalizing of central bank balance sheets, which will start squeezing liquidity sooner or later. We are still an overweight market for most allocators of global capital. So we will lose some of that. But the good news is the DII money which is coming in, the SIP 7,000 crores a month, that is coming in systematic plans and mutual funds getting 10 to 15,000 crores. So if that flow continues, that can absorb a lot of the FI absence from the market. The second big thing which we need to watch out for is the domestic interest rates. Where does the oil price go? How is our current account deficit working? And how is our fiscal deficit working? That's why I've been saying have some pharma, have some IT in the portfolio. These are defensives. These will not be impacted. In fact, the exporters will benefit if the rupee tanks and the rupee goes down against a stronger dollar with the Fed raising rates. So we have to think through these trends and play for that. But given the domestic consumption, strong domestic economy, and a section of the society continuing to have a surplus, sectors like auto will do very well. The private banks which are serving these segments will do very well. It becomes a no-brainer to create that kind of a portfolio then.
Ajay, do you see any value then in IT, the sole sector which has given some bit of support to the markets this year?
Yeah, IT turns this year. I think from September onwards, we are seeing IT starting to perform. And now they seem to have fixed their business models, and there is a lot of opportunity. So, the H-1B visa has not come out as badly as anticipated. All the commentaries that you see, BFSI is globally recovering. Manufacturing still has some issues, but it's not negative. Retail is in trouble. Oil and gas is very strongly recovering given the oil prices. So quite a few segments are doing quite well, and that will help our IT players. Again, very well managed companies. And the worst case scenario is a 6 to 8% revenue growth, 2% in share buybacks, and 2% through dividend yield. So you're looking at a 10 to 12% return as an investor, which you would take any day. So I would say IT has to be a part of any diversified portfolio. Within that, if you can choose well, you could nudge it towards 15 to 18% kind of returns from select mid-cap IT. That is very much possible, I think, for this year.
Okay, Ajay, I guess we'll leave it at that note. Thanks a lot for joining us today and taking us through your views on the markets. Well, that was Ajay Bagga, who again, like other market participants, does feel that the markets will bounce back in the new financial year. But let's move on and talk about individual stocks. Ester Industries is the one which is in focus. The counter is trading with strong gains in today's trading session. And not only today, actually, this counter has outperformed the markets on Y-to-D basis as well. Let's ask the management. Joining us now on the phone line is the Managing Director of the company, Mr. Arvind Singhania. Hi, Mr. Singhania. Good afternoon, and thanks a lot for joining us.
Thank you.
You had an investor meet last week with Lucky Investment, a fund which is held by a very known investor in the market, Ashish Kacholia, who already holds, I guess, nearly 1.2% stake in the company. If possible, could you share any takeaways of that meeting with us?
Well, discussed with many investors, not only with Lucky Investments and Ashish Kacholia, but we had a meet with 5 or 6 institutional investors and analysts as well. So we discussed broadly about the future course of action for Ester, about a specialty polymer division, about a polyester film division, which are the main divisions going forward. So as we see it, as far as the specialty polymer division is concerned, we've been in this business for 7 years. The gestation period for technology business is very long. That's what we came to learn the hard way. But now it is really kicked off because one of our main products, our marquee product, the MBO3 stain-resistant master batch, has taken off very well. And we are going to increase volumes from about 300 tons a year for the last 2 years that we've been doing to about 2,000 tons a year. So that's a substantial kickstart that we are getting in our specialty polymer business. And this will take our turnover up from the current year of about 50 crores to about 120 crores going forward in the specialty polymer business. Further on, we see a further rise in this business to about 200 crores in FY20. And over a period of 4 to 5 years, we expect this business to be in the range of 300 to 500 crores with very, very strong EBIT margins. As far as the polyester film business is concerned, which was a quasi-commodity and been in a lull zone for the last few years, primarily due to overcapacity, we now see that the very strong demand, which has risen from about 7 to 8% per annum to about 13-14% per annum in the domestic market. The demand-supply scenario has balanced out at an equilibrium state. And as a result, we have seen a rise in the margins of our products especially in the last quarter. And with no new further capacities expected till second half of next year, we expect the markets to be very, very strong.
Okay, Mr. Singhania, your key raw material, correct me if I'm wrong, is crude derivatives, and we've seen the crude prices inching higher, at least in the last few months. If you could just give us a sense, how does this increase in crude prices impact your margins going ahead, or are you properly hedged there?
No, this is not a question of hedging. It's in our business, both in polyester film and in specialty polymer business, the raw material is passed through. So whether the raw material goes up or comes down, it's a pass-through model.
Any sort of price increase on back of that increase in input costs that you've taken, or are you looking to take?
No, it's a pass-through. So if the raw material increases, automatically the market absorbs it. In fact, our specialty polymer business, the prices are fixed and therefore the margins are fixed. And every month we move the price according to raw material movement. If it increases, we increase prices. If it decreases, we decrease prices. Okay, so really raw material has no impact on our margins.
Fair enough. 9-month margins for your company have been around 8%. That's what your press release states. What's the target going ahead in FY19? Can we look at double-digit margins?
Oh, yes. We are expecting our EBITDA margins to be double digits for sure. Good double digits.
And these EBITDA margins at double digits would therefore ensure that the bottom line growth is disproportionately higher than the top line growth, Mr. Singhania?
Yes, it will be disproportionately higher.
Could you, by any chance, give a rough estimate?
Well, we are looking at FY19 numbers to be around 950 crores top line, which should be about, if I'm not mistaken, about a 17% top line growth. And EBITDA margins could be in the triple-digit band.
Okay. EBITDA would be in the triple-digit band, you mean?
Yeah, absolute EBITDA.
Interesting. I think people are very bullish. Mr. Singhania, there's a note which says, of course, that your profits may quadruple, actually much more than that in FY20 or FY18. Would these be fair estimates?
Sorry?
There are estimates which speak about how your profits will really multiply over the next 2 years as the operating leverage kicks in, not just doubling or trebling, but much more than that over a 2-year period from FY18 to FY20. Would these be reasonable estimates?
Yes. Absolutely. Okay,
so more than quadruple. You yourself would believe that your profits could actually go up 5x, 6x from FY18 to FY20 odd? Would that be...
You see, if you're comparing it to our current levels, which is virtually just break even in December quarter.
Then the base is anyways there.
Then when you're talking multiples, it's multiples of a very low number can be very high, na?
Yeah, true. No, I was more thinking about what would happen for FY18 as a whole, and then it goes up to, I understand the quarter numbers obviously look very minuscule, but FY18 profits versus what will happen in FY20 or?
Yeah, FY18, I mean by FY19, you see, you can make out from the EBITDA guidance I've given you.
Right.
I mean, you know, if my EBITDA goes from, we've done about 60 crores of EBITDA in 9 months, 61 crores in 9 months. And if you're talking about triple digit for 19,
it
I
gives
think,
you an indication.
Yeah.
It does. Great. No need anything else?
Just one more question, Mr. Singhania. I think your yearly finance cost is somewhere between 30 to 35 crore, and the debt on books is also somewhere about 300 crore, assuming the cost of debt that you have is around 10%. If you could tell us, what's the schedule like with regard to debt repayment in FY19 as well as FY20?
Yeah, so our debt repayment in FY19 will be about 44 crores.
Okay.
And we will also have an increase in our margin money and for working capital requirement because our business is increasing. So overall, if you talk about debt, which stands at about 287 crores today, you will see a marginal reduction in FY19 and a more substantial reduction in FY20, because we've also taken up capexes of about 30 crores which were pending for some years because of performance not being adequate. We had held back some necessary ongoing capexes, nothing related to just maintenance capexes.
So the finance cost which you save by repaying this 44 or 50 crore of debt, you're saying, can that be reflected in the bottom line or no?
Yes, it will get reflected, but marginally in FY19.
Okay.
Maybe 30 to 35 crores.
Okay.
And then it will reduce more substantially in FY20.
Okay, Mr. Singhania, we'll leave it at that note. All the best for the coming quarters to you.
Thank you.
All right, that was the management of Ester Industries sounding quite positive on their specialty polymer business, and they expect higher contribution going ahead from that sector. Just pull up the YTD chart actually in a weak market where we've seen the broader markets correcting. This is the stock which has actually given good returns this year. It's up nearly 14 to 15%. But switching focus back to markets, Nifty is at 10,120 right now. Bank Nifty is the one which has actually come under pressure, 24,165 for that. But let's talk about one of the Nifty constituents and put spotlight on Hindalco. Morgan Stanley has downgraded the stock from overweight to equal weight rating and has also cut its price target to 256 from an earlier price target of 292 rupees. However, the stock has snapped a 3-day losing streak today. Neeraj is here with an analysis on the stock, courtesy the Bloomberg terminal. Neeraj.
Okay, so the spotlight on Hindalco is predominantly because of the Morgan Stanley note, and that despite this note and the target price cut today, commodities by and large have moved up, and as a result of that, maybe Hindalco too moving up in the session. Some pointers that they've given out, and then I'll use the graphic dashboard to tell you about how trade has been shaped out today. Morgan Stanley says that the volumes peak in domestic and the international businesses, and that's one key monitorable, as a result of which the stock and the volumes may correct. In fact, the aluminum import duty a downside risk to Novelis's margins as well, and that could impact the console numbers for Hindalco. They've cut their FY19 EBITDA estimates by about 4% and as a result of all of these factors, their overall price target has come off, as we said, about a 15-20% cut in the target price. Now just bring up the graphic dashboard for Hindalco, and you will see that the stock, despite this cut, is trading today with a fair bit of volume. It is a bit of a disadvantage in terms of the discount that it has to peers. The 12-month target price, consensus target price, substantially higher than what the current price is, and 28 out of the 30 people either have a hold or a buy call on Hindalco. So the street is fairly bullish on Hindalco. It is trading at a slight discount. The volumes today are substantially higher than the 20-day average as well, which is all auguring well for the kind of trade that we're seeing in Hindalco today. Despite one large brokerage's call, the market the momentum and the market moved not exactly gung-ho. Hindalco has managed to defy all of that and move well. We just need to wait and watch if there is more in store or no. But the activity, trading activity today certainly fairly encouraging, both on the price as well as on the volume front.
Okay, that's about Hindalco. Remember, in the recent past, we did see the metal stocks coming under pressure post that news of trade war after the US administration announced to impose import tariffs on commodities like steel, aluminum. Their subsidiary in US, Novelis, some of the brokerages said could be impacted because of that move. But that's about Hindalco. That's doing well in today's session. But what to do with the markets? Let's get some technical check going. And joining us now on the show is Amar Singh, Head of Advisory at Angel Broking, who's joining us on the show right now. Hi, Amar. Good afternoon. And thanks a lot for joining us today. We've seen a bit of pullback, you know, from those lower levels that were seen when the market opened today. How are you using this pullback? Would you use it to create fresh short positions?
Yeah, very good afternoon. The way Nifty bounced back, that was on expected lines, because after the sharp correction somewhere around 10,000, 10,040, that was a very strong support zone for Nifty, and from there only the market moved significantly higher, but it's not able to sustain towards 10,150, 160. So ideally, what one needs to pay attention here is that yes, the downside seems to be subsiding, and there is some very strong support zone around the 10,000 mark. So that what it effectively means is that those who are on the short side, they are covering the shorts. Those who want to enter long, they are entering long with a stop loss below 10,000, with the anticipation that they would exit somewhere around 10,150, 160, 170 zone, because that's the immediate short-term zone of resistance. Because if that is taken out, then it could head higher towards 10,200, 220 levels. But primarily, if you're looking at the overall trend for Nifty, what we are witnessing is that the long-term trend, yes, that remains intact. That is still up. There's no doubt about it. But the short-term trend as well as the intermediate-term trend, they are clearly reflecting that there is any pullback, sharp pullback is going to meet with selling pressure and also fresh shorts being created into the system. And so what we see is that Nifty could consolidate between 10,000 on the downside and 10,250 to 300 on the upside. Till that level on the higher side is not taken out, I would say that any pullback will be used as a shorting opportunity.
Okay. Any pullback or shorting opportunity until a particular level, but you won't take a short right now, Amar. I believe that would be the call. And yeah, is that a correct assessment?
Yeah, not at these levels, but yes, any pullback towards 10,145 or 150, that can be, I would say, as a good selling opportunity, because the stop loss needs to be above 10,185 levels. So ideally, going short around 10,145, 150, that could be a good level to go short. And the target in that case would be in the region of 10,055 to 10,060 on the downside.
Okay. So 10,133, 10,132 or 133 on the spot, 10,150 on the futures already. So I think Amar Singh will probably go short about 15, 20 points higher, not at the current levels. What about specific stocks, Amar? What are you recommending today?
Yeah, there are a couple of stocks that I would recommend. One is on the buy, the other is on the sell. The first I'll talk about the sell. Sell is, the stock here is BHEL. What we are witnessing in BHEL, that this stock is really, if you look at the overall trend, the trend has been persistently on the negative side. The trend has been down, and technically also it's not displaying much of a strength. So any pullback towards 85 levels, that can be used to initiate a short position with a stop loss above 87 and a target somewhere in the region of 78 or so. So that's on the short side. On the long side, Mahindra and Mahindra Finance, that's a stock which is really, I would say, the trend, long-term trend is very strong for this stock. And also, if you look at the stock has corrected from almost 512 levels since the last week of January. And the short-term trend is now currently showing signs of revival. So that clearly means that this is a stock one can look at buying. So the level that one can enter is around 430, 433 levels with a stop loss below 423 and a target of 451 in the short term.
Okay, so those are a couple of the trading strategies being highlighted by Amar. But let's move on and talk about the aviation space. Pratt at Whitney is set to have shared a plan with Indigo to replace the faulty engines for all A320neo aircraft. The 11 planes have now been grounded by the DGCA after the engines malfunctioned on various instances. Bloomberg News' Anurag Kotuki joins in with all the details. Hi Anurag, could you tell us by when can Indigo get all its planes back in air?
Right. What Pratt & Whitney has shared with Indigo is that it will take about 40 days to get all the grounded aircraft flying again. Remember, this issue relates to a particular seal on the engine, and that seal is supposed to cause vibration, which may result in in-flight shutdowns of engines. So this is a grounded 11 of Indigo's aircraft and 3 of Go Air's aircraft. And if deliveries start tomorrow, as Pratt has communicated, then it will take about 40 days for all the grounded aircraft to fly back again. Remember, this has resulted in a big headache for all parties concerned, Indigo, Pratt & Whitney, as well as Airbus, and most of all passengers, because there are hundreds of flights which are being cancelled by Indigo and Go Air. So for that situation to completely go away, it will be about 40 days from now.
Okay, Anurag, thanks a lot for bringing all those details. We'll be watching out for that. The aviation space as it is has been in focus after we've also got the traffic numbers going in for the month of February. The total traffic growth was nearly 24% being registered. But let's bring in our fundamental guest, Jagannadham Thunuguntla, Senior Vice President at Head of Research for Wealth at Centrum Broking, joins us on the show. Now, hi, Mr. Thunuguntla. Good afternoon and appreciate you joining us today on Bloomberg Quinn. First, I want your view on the aviation space. We've also received the air traffic numbers for the month of February, and that's been quite a good growth of 24%. Despite that, I guess the March numbers will now be impacted because of few planes being grounded. If you have coverage in stocks like Jet, Indigo or SpiceJet, and if you could share with us.
As far as the aviation in general as a space is definitely it will go up eventually for a simple reason that the air traffic and the culture of traveling by air has more or less has become the norm now. In the sense, even the middle class, even the higher upper middle class, definitely using the flights as the mode of transportation. So the traffic will eventually should rise. Having said that, aviation is a very tricky business to be in. So there are a whole host of examples worldwide where aviation has caused more wealth damage than the wealth creation. But having said that, the companies who have strong fundamentals, like say Interglobe Aviation, the company which runs Indigo, probably is having good numbers. I think good ratios, etc. Of course, the grounding element of news, these are like short-term hiccups, and that can always happen, but eventually that should settle down. I think in terms of market share or in terms of profit margins, etc., Indigo is best positioned at this position.
Jagannadham, good afternoon. Neeraj here. Thanks for joining in. What's the view on metals by and large? I mean, there is a bit of a pullback, or in fact, a significant pullback from the recent highs that these stocks have already shown. Does the commodity rally stay intact, and therefore would you go out and buy any of the metal names?
At this moment, as a Centrum house, we have a neutral view. We are not particularly gung-ho. At the same time, we are not particularly bearish, because one is we have to understand so much is happening worldwide, be it in the China versus US relationships and the trade war developments, etc. We have to understand that what kind of final shape all this will take, because now China is talking about some tariff cuts and US is talking about additional $60 billion of tariff hikes. So all put together, there will be a lot of volatility and a lot of uncertainty in many of these names. So as we speak, we have a neutral view on metals, not particularly gung-ho or bearish.
Ferrous, non-ferrous, it doesn't matter. You are neutral across the board on the metal space.
At this moment, yes. I think so. I think probably these global macros, these trade war related developments should settle down. And because market after it corrected, there are so many opportunities. I think market is giving so many opportunities in so many sectors. I think one can pick and choose. I think one need not be going after each and every sector at this moment.
Which is a pertinent point too. By the way, just before we carry on our discussion, I want to mark what's happening to Adani Transmission. That stock has pretty well for itself, I must say. Look at that bump up in the last few minutes of trade, 7.5% on 2 million shares traded. So that's doing very well. Also, what is doing well is SL Pro Pack. That stock has jumped up about 3 or 4% from the levels that it was trading at. So big move out there. And mid-cap IT seems to be in the thick of things today yet again. So look at NIIT Tech, look at Hexaware, and look at Zensar Tech. Each of these have had some moves in the last few minutes of trade. Jagannadham, where are you on the mid-cap IT side? Are you slightly cautious here, or you guys are constructive? And if so, what stock do you like within this mid-cap IT pocket?
So we have a contrarian opinion on both IT as well as pharma, if we can extend that argument, because the last year or so, clearly both the spaces have been bearish. But somewhere, I think, especially in the case of IT, the bottoms are slowly, I think, getting placed. I think probably the one wants to venture out as a contrarian bet. IT can be a good opportunity. And as the stock ideas here, we have Take Solutions as one of the niche ideas and in the mid cap IT, and also so is the case with Axel, and which has very good presence in the aviation related designing business. So these two are good picks, as well as in the auto related tech spaces, Tata Elxsi. These are some of the mid cap IT ideas we are bullish at this moment.
Okay, why Axelia Kale Jagannadham? For the longest time, the stock really hasn't gone anywhere. I mean, I looked at the last 1 year charts, etc. The stock has hardly made any money.
Actually, we have been maintaining the bullish view for quite some time. Almost it's a 2-3 year kind of call. I think it has been a huge wealth creator. Having said that, last 1 year is, I think it's consolidating its gains, but it's in a very sweet spot. And we believe, I think when the opportunity presents itself, I'm sure this can be a good stock. At least it has not eroded the wealth like many other stocks in the space. So that itself shows it is in quality, sophisticated investors' hands.
Mr. Thunuguntla, Centrum also has maintained its outperform rating on Cholamandalam. If you could take us through the rationale, what sort of target price and the time horizon you have here?
And especially so much news flow going on about the BFSI space, the fund managers and especially BFSI specific fund managers are very, very careful in terms of which stocks they are entering. And we believe Chola Finance is perfectly positioned with its track record, and in terms of margins or asset quality is extremely well positioned, with about 8.8% of net interest margins, is arguably one of the highest net interest margins in the industry. That shows the health of the company, and at the same time the asset quality is more or less intact. For instance, gross NPAs at 3.3% and net NPA at 2.8%, so reflect that asset quality is still in good shape, and we believe going forward asset quality will improve further. And as of now, as we speak, as a loan book is of 34,000 crores, and we are expecting that it will reach 51,000 crores at a CAGR of 24% in the next 2 years or so. Especially their main core strength is vehicle financing, where almost 75 to 80% of the book is comprising of vehicle financing, which we believe should go much stronger going forward. And especially Q3 FY18, that is last concluded quarter, this particular vehicle financing space itself shown 61% growth, which is stellar. So I think Chola Finance is making of good wealth creator even in this market. If you closely notice in the last 2 months also, the stock has not corrected at all. What it shows is the kind of strong hands the stock is into. And once the market momentum starts, these kind of stocks, I'm sure, will rally much faster than the remaining market.
Very interesting. Thanks for that rationale as well as Jagannadham. Just stay on. We'll take a couple of other thoughts from you as well. But let's welcome on the show Sacchitanand Uttekar of Trade Bulls. He joins us on the show as well, along with Amar Singh, to talk about the charts. And Sacchitanand, good afternoon. How are you approaching trade amidst all the limited band volatility that we've seen? We look like we'll end flat because, except for the Nifty Bank, the Sensex and the Nifty are just trading absolutely flat. Are you initiating any fresh trades on the indices?
Well, good afternoon. Yes, in fact, we are of the opinion that this is a cautious zone for the market. In fact, the way it has been, spending last 2 trading sessions nearly 200-day exponential moving averages. And if you look at the overall setup itself, like we have been mentioning about this since quite a time, that the first impulse that we saw from 6th of December till 29th of January, this entire impulse comprised of around 36 trading sessions, and this correction which started somewhere in on 30th of January. The intensity of this particular move on the corrective side is somewhere, diminishing now, and this is why we are very optimistic right now. And for short positions, one should really, not take that particular stance, and one should try to, cover up their short positions in case if there are any. And this is a sweet spot wherein we may see market stabilizing. So if you look at the 30-minute setup itself, what we are seeing is that the index has been oscillating within a falling channel pattern, with the RSI showing divergence. So there's a strong case scenario that in case if this particular level is defended, we may see again a rebound close to 10,300, 10,340 levels. So I think this is a good time wherein one can look at deploying a bull call spread, wherein Nifty 10,250 call option should be bought, and simultaneously 10,600 call option has to be sold. The net premium combined premium that is available is around $40. So that is a very good risk at this point of time. In case if this particular rebound happens, we may see a strong recovery, and you can easily gain around 200, 210 points in a very short span of time. So I think this is a good zone wherein one should look at buying opportunities rather than shorting.
Sacchitanand, in terms of individual stocks, any strategies there?
Well, two stock ideas. One is Oro Pharma. If you look at the overall performance from 620 levels, the stock has been gyrating lower. Again, it is placed somewhere close to its support zone. 570, 565 has been a strong support zone in the previous history. So we are expecting a rebound from here on. A stop loss can be placed somewhere close to 548, and the target on the upside remains around 620. The second call is a buy call on Petronet LNG. If you look at the weekly structure is still intact on the bullish side. We saw bullish Harami getting reinstated in the previous week. So we are expecting that this particular stock could stabilize from here on. A stop loss can be placed at around 231 and a positional target of around 252 for Petronet LNG.
Amar, there are 2 or 3 names which have just moved up in the last few minutes of trade. Wonder if you have thoughts here. Adani Transmission is one, SL Propack is other one, and NIT Tech is the third one. Any thoughts on any of these 3 names?
Yeah, looking at SL Propack, what we are witnessing is that SL Propack, I would say, has taken very strong support somewhere on the monthly charts. So that's the reason around 240, 243, that's a very strong support zone. And also, if you look at these particular, if you look at the chart of SL Propack, it's in an extremely oversold territory. And also getting support around the monthly charts, that also has helped this stock bounce back. But the overall trend remains negative. It would meet with resistance somewhere around 260, 62 on the upside. That's the one. Second, I'll talk about Adani Transmission. See, Adani Transmission is extremely strong on the long-term charts. On the short-term charts also, there is this consolidation and breakout which is happening. So it's currently around 198 odd levels or so. But on the medium-term charts, intermediate term, it's trading flat. If you look for the last 4 or 5 weeks, it's been consolidating. If you look at the range, it's 170 on the downside and roughly 200 and 205 on the upside. So till the time the stock doesn't take out the 204, 205 levels on the upside, I would say that it's likely to trade flat. But if it consistently trades above 205 levels, then the stock is headed higher towards 235, 240 levels.
Okay, that's the view on a couple of these stocks which have just moved higher in the last 10 to 15 minutes of trade. And also, one more stock from the consumer space which is doing well is Marico. If you could just pull up that counter, it's seen gains of nearly 4 to 5%. And let me tell you that when the markets were weak in the last 2 to 3 sessions, the stock managed to close in the green. In fact, today is the 3rd straight day when Marico is trading in the green. Can we pull up the futures? Because the Marico March futures have seen some long build-up. Usually this counter is not so active in the futures and options space. Sorry for that late. We'll get you the exact data. 18% higher as that reflected, which is telling you some fresh long positions have been taken for this counter. Mr. Thunuguntla, before we let you go in the consumer space, if you guys track Marico, the valuations for majority of these companies besides ITC may look expensive, but anything in this space that your house has coverage on?
Yeah, Marico is, we are bullish on the stock. Definitely, it has one of those stocks where probably some smart money will try to take the shelter under. So these are some of the defensive kind of plays in this market. I think besides Godrej Consumer Products, I think that is also one more stock where we are bullish on the same space. I think one has to be very, very selective. So these two stocks can be kept under Marico and Godrej Consumer Products.
Okay. Jagannadham, always a pleasure having you. Thank you so much for taking the time out. It's been the first time. It's the first time that we're talking on Bloomberg Quint. Look forward to have you more often on this forum.
Thank you. Thank you.
That's Jagannadham Thunuguntla with his thoughts on some specific stocks as well. Speaking of specific stocks, while the index may be flat, there is this Valorum analyst conference that is on. Bloomberg Quint, of course, out there and talking to various corporates. The focus today is on the capital goods space, and joining us now is Manish Sanghi. He's managing director at Everest Industries on the sidelines of the conference. Also, Yash Upadhyay from our research team joins in to take the conversation forward. Yash.
Well, first of all, sir, let me ask you, 50% or almost a bulk of your revenues, they come from the roofing segment. What sort of opportunities do you see there?
Roofing is good business. So there is, we think it's a good business to be in. India needs more roofs. There are a lot of people without roofs, and we think that this particular segment is going to grow further in the future. The kind of roofs that people may want is likely to change with better lifestyles, and the challenge is going to be how do we cope up with the requirements of the people as they evolve into better and better solutions. So, but we think roofing is good business, and we believe the business will grow.
Okay, sir. And with respect to expansion, what sort of plans do you have for the roofing segment?
So Everest really operates in many different segments of the roofing business. So number one segment, as you rightly pointed out, is the rural segment, where so far we had one particular offering, which was the plain vanilla grey corrugated cement sheet. We have recently introduced another very, very interesting variant called the Everest Super, which takes care of the many shortcomings which were there with the traditional product. The shortcomings primarily being that it used to become black with time, and it was available in any color as long as it was grey. So we have launched this product which would not become black with time and comes in a variety of attractive colors, and we believe that this can expand the market and will become the real product which all people would want on their houses. The second bit is that we are entering into the metal roofing business. So, so far we were doing projects only for the industrial roofs. We are now entering the retail sector with a product called DuraSteel, and we have set up manufacturing for that in our plants at Ranchi, in the plants at Nasik, in Bharuch, and in Roorkee. And we expect that business to give us interesting growth options as we move forward.
So while your roofing business has been doing quite well, the steel building segment has been depressed for the past few quarters, mainly on account of the high steel prices. By when do we expect to turn EBIT positive in the segment?
We think that we should be turning EBIT positive from the next quarter onwards. The pain will be there till the time the old order book stands. We started with a low order book, so the pain is going to be much lesser for us than for people who had a fat order book. It's a very volume dependent business, and we are seeing signs of a revival as far as the capital investment goes, particularly in the private sector. A lot more people are talking about putting up new facilities, new capacities, and provided the steel prices remain stable, we should be doing good on it in the coming fiscal.
Also, sir, the brokerages seem to be quite bullish on your boards and panels segment, and while it only contributes about 15% of your total revenues, what could that number be like probably 2 to 3 years down the line?
We think we should be good in this particular segment from the toward the end of the first quarter, but really the result should come in the second quarter.
Okay, sir. And finally, would like to know what are your capacity expansion plans going forward?
The capex which has been finalized and announced is we took up a modernization of our factory in Calcutta. It's a very old factory, so the roofing line there has been modernized. We would be doing a similar kind of a modernization project on some of our board lines in Nasik. As far as the greenfield expansion is concerned, we do not have any specific plans right now, and as and when something comes up, we will announce it.
Well, thank you, Mr. Singh. That was the management of Everest Industries. Back to you guys in the studio.
Thanks a lot for that, Yash. Well, I tell you what, it's 2:55, about time that we slip into a break. On notes that the indices are trading very, very quietly, in fact, marginally in the red now. And the Nifty Bank, though, is the key culprit, which is down about 152 odd points. There's no solace out there in the banking space. It was trading sub the 200-day moving average, and it continues to drag lower. Of course, as we head into the break, hear out Sean Darby of Jefferies on markets, oil prices, and more.
Appetite is actually quite appealing in terms of the way that people are viewing risky assets. In that sense, I don't think necessarily the growth story is over. And as I said, as you mentioned about the view on global capex, this theme is starting now to move out, not just move outside of the United States and move through Europe and Japan. So in that context, investors have a much wider breadth of stocks to invest in. But if the dollar were to stage a sharp rally in the context of perhaps a much more hawkish Fed or sentiment were to turn towards more tightening in 2019, then that's faster than envisaged, that would possibly be the worst scenario for equities. Outside of natural gas and food, the bulk of the commodity complex has actually increased. And I think also, provided global growth is strong, I don't necessarily think there's going to be a serious relapse in the crude oil price over the next 6 to 12 months. Capital flow story is much more of a virus for financial markets, because these patterns of money movements have been very long-standing in some cases. For example, financing the US Treasury positions, the financing of the US Treasury deficits. This is a much more complex game, and I think the more you go down a trade war, whilst there's a direct impact on GDP, perhaps for the financial markets, it's the changes in liquidity that become much more of a headwind for asset prices.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. जिंदगी के साथ भी, जिंदगी के बाद भी.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. La.
Are
This bridge gets you in touch with interested investors, funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange. White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Countdown right here on Bloomberg Quint. Just bring up the turnover in the session today and just see what's happening there. About 23,000 crores done on the NSE cash. So it's still woefully short of what we usually do, as average is about 30,000. On the NSE FNO though, the volumes are looking reasonably okay in trade. The markets, well, the Nifty Bank 2 has recovered a little bit from the intraday lows. Let's get in Yash Upadhyay, who is joining us with the Fab 4 stocks of the day after just interviewing the management of Everest Industries as well. Busy afternoon for you, Yash, but what are the stocks that are finding their way to the list?
Right, so first of all, we have Elpro India. Now, this one is locked in a 20% upper circuit today after the company said that it is in discussion with one of the potential buyers to sell its 1.25% stake in PNB MetLife for a sum of about 125 crore rupees. They hold about 13% stake in the company. Arfin India received a repeat order from JSW Steel for the supply of aluminum and cord wire products for a total sum of about 170 crore rupees, and the stock has reacted positively, up about 2.5%. Sugar stocks were in focus today. Balrampur Chini is up about 5% after the government decided to scrap the 20% duty on the exports of sugar in order to help sugar millers cut down on the excess inventory. And finally, we are also looking at Prism Cement. This one had gained as much as 4.5% today after some 28 lakh shares changed hands via multiple block deals. We'll get you who the buyers and sellers are once the bulk deal data gets updated. Back to you.
Thanks a lot for that. So those some interesting names. On the chart of the day now, the Nifty Mid Cap 100 has been the worst sectoral performer since the sell-off began this year. But that doesn't mean that analysts are not bullish on individual stocks. Shraddha has drawn up a list of companies that not only have 100% buy rating, but they also have significant favor from the analysts and an upside of more than 20% according to the analysts tracking the company. Shraddha, which are these companies?
Well, so the Nifty Mid-Cap 100 Index has corrected at nearly thrice the pace as compared to the 3.9% loss in the benchmark Nifty 50 Index so far this year. But a handful of mid-cap stocks still remain analyst favorites. Not only do they have a 100% buy rating, but they also offer a return potential of more than 20% from the current prices, and that's according to the estimates of analysts that are tracked by Bloomberg. So Sterlite Technologies leads the chart with a return potential of 45%. Aditya Birla Fashion and Strides soon follow closely with returns of 43 and 42%. Mahindra CIE, KEI Industries and Ashoka Buildcon are the other names in this mid-cap favorite list. Only stocks that are tracked by at least 10 analysts and that have a market capitalization of between 1,000 crores to 25,000 crores were considered for this analysis, and that's today's chart of the day.
Okay, Shraddha, thanks a lot for bringing in all those details with regard to chart of the day. Just want to highlight a few stocks before we bring in our next fundamental analyst. EIH Associated Hotels, a stock which had corrected a lot, has bounced back today. That's trading with gains of 12%. Dhanalakshmi Bank has also done pretty well today. That, in fact, after touching its 52-week low in today's session of 20.5, has bounced back and is now trading with gains of nearly 3%. Pull up Orbit Exports. I think that counter saw some bit of buying momentum coming in the last few minutes of trade or so. Orbit Export now is trading with gains of 5 to 6%. Looks like it's not a very liquid counter. But let's bring in Mr. G. Chokalingam, founder and managing director at Economics Research. Hi, Mr. Chokalingam. Good afternoon to you, and thanks a lot for joining us. What are you doing in markets like these, and are you looking to buy something, or are you still waiting for more correction?
No, last 1 week we have been buying because now the market cap is down by 15 lakh crore. From 156.5 trillion rupees of market cap on Jan 23rd. Now it has come down by about 15 lakh crore. In the process, as you know, many stocks have come down by 30-35%. So I believe that after a long gap, we are getting the opportunity to buy many stocks at a very attractive valuation. So in fact, we have advised our clients back to to tilt towards good quality mid cap, since many stocks are down badly. And valuation comfort has emerged suddenly within 40-45 days now.
Are those stocks that you're advising your clients to buy at current levels?
Yeah, there are many. To just quote some, Bombay Burma, which is down by nearly 30% from the recent peak. It's a holding company of Britannia Industry. It has got 50.7% stake in Britannia Industry. It has got a discount of around 71% to value of investments, whereas all holding companies, the average discount is around 50%. So if you assume 50% discount for this company as well, the stock is worth minimum 2,000 crore. Unlike other holding companies, this Bombay Burma is not a shell company. Standalone, it has got several thousands of acres of tea and coffee plantations and other assets. So this is one stock we have been rebuilding quite aggressively. Second stock is Vindhya Telelink. It has come down from 1450 to around 1000 level. The value of investment it holds in Birla Corp, a cement company, is approximately 2 times the market cap of Vindhya Tele. Apart from that, it is phenomenally doing well in EPC projects for telecom. So then third, JB Chemical. This has got very attractive valuation, strong balance sheet, good management. So these are some of the high conviction stocks which you have been buying quite aggressively in the recent days.
I was just looking at stocks on a day when the markets have recovered a bit, but stocks which are correcting quite viciously today. Just look at AdLabs, for example. That stock should come up on your screen. And that's trading, I think, at fresh lows for itself. So 5% down, and trading at fresh 52-week lows is AdLabs. On mobile is 3.5% down, again trading at fresh 52-week lows. Lovable Lingerie is down about 2.5-3% and trading at fresh 52-week lows for itself today. Stocks like Uttekar from the newly listed or recently listed space are also trading at fresh lows for themselves. So there's a set of stocks out there which aren't quite doing all that well. Mr. Chokalingam, do you track this entertainment space, the AdLabs, Wonderla Holidays, etc.? It's a very small bucket of stocks, but worthwhile investing. A clutch of retail investors have invested in these companies.
No, AdLabs is not able to make a profit. So what happens when you have a lot of leverage on the books and you are not able to turn over the business over the years, then the liability keeps mounting. So I wouldn't suggest AdLabs. Wonderland is a good company, decent entertainment company. It makes a good amount of profit. So any further decline, one can definitely buy Wonderland.
Well, clearly the beaten down stocks are bouncing back in today's session, and one of them is Reliance Infrastructure, which is now one of the top gainers in terms of F&O securities as well. Amar, if somebody was holding a short position here with today's bounce back, do you think they should close the position now?
You're talking about specific Reliance Infrastructure or overall?
Reliance Infrastructure.
Yeah, Reliance Infrastructure, yes, one should, if one is short, then one should definitely cover one's short, because it's currently trading around 453 odd levels or so. And looking at the long-term charts, I would say the long-term charts are more or less flat, and they are around major support levels. That's the reason why we've seen a bounce back. And even on the medium term as well as the medium term charts, it was in oversold territory. So the downside was definitely limited, and also the low which it had made earlier towards the first week of March, somewhere around 400 odd levels or so. So clearly that was a bottom formation for the stock. And the stock seems to be headed higher towards 475, 480 on the upside, where it could meet with selling resistance. So yes, anyone having a short position should get out of his short position in the stock.
Interesting. So that's the view on Reliance Infra. Some other stocks which have had a really sharp up move today include Marico, which is up 5%, unnaturally up 5% in trade. So big move there. And been crying hoarse about NIT Technologies. That stock at 4% higher, very active in the F&O space, so this series as well, and continue to do that. Sacchitanand, chalk and cheese, Marico and NIT Technologies, but both of them up today. Any of these stocks that looks interesting on the charts?
Well, Marico is one stock which generally does not show very strong momentum moves, but this is the first time again, after a prolonged consolidation, it has managed to sustain this particular kind of a momentum. So I think there's an opportunity here. 310 should be the stop loss for this particular trade. Once the level of around 330 is crossed, we may see an extension of this particular move towards the 355, 350 zone. So I think with the stop loss close to 310, this looks like a good buy.
Okay. Stay on, gentlemen. That time of the show wherein we try and tell you what stocks could come in and in the F&O ban or get out of the F&O ban, and Navneet usually has a list. Navneet, is the list looking long today?
Yep, there are 5 stocks which feature in my list in today's trading session. Let me start off with the stocks which are likely to enter into the F&O ban for tomorrow's trade, and one of them is IFCI. There's been some amount of build-up in terms of open interest on both the futures as well as the options. If you look at the total OI as a percentage of market-wide position limit, as of yesterday was 93.5, and for a stock to enter into the F&O ban, remember it has to breach the 95% mark. So even OBC is pretty close to that, and that too has seen some open interest addition in today's session. The interesting one is Jindal Steel and Power. The metal stocks have bounced back today, but this one has seen good amount of build-up. In fact, existing open interest was also on the higher side. That was 88%, and considering today's trading activity in the derivatives market, it could just enter into the F&O ban for tomorrow's trade. What can come out? 2 stocks, Dewan Housing as well as BEML, which has touched its fresh 52-week low in today's session. For the stock to come out, it has to breach the 80% mark, and there has been some unwinding for both futures as well as the option strike for Dewan Housing as well as BEML.
Okay, we'll watch out for each of these names. Thanks for that, Navneet. Well, actually, let me ask Sacchitanand about these. Sacchitanand, BEL, BEML, or any of the PSU names that stand out?
Actually, if you look at most of them, I think they are still in that pain zone. But when we look at BEL, the contraction has been really good. 145, 148 has been a stable support for the stock. But if you look at, purely from a resistance perspective, I think 155 is the immediate hurdle. So let this particular, support get held on. Once we see a breakout about 155, there could be a very sharp recovery in this particular stock right up to 170. But as of now, I think it is still trending near its particular support. The best part is that this particular support has been respected 3 times. So I think there's a fair number of probability that the stock may again jump up and clear the 155 zone. So for a very short-term trader, in case if they want to buy something at a very lower price, then probably 145 should be the stop loss for BEML with an expectation of a move above 155. So I think there's a trade which can be initiated only for some short-term high-risk traders.
Okay, that's the view coming in on these PSU stocks. But what is not doing well in today's trading session is Canara Bank, which is underperforming. That's down 4%, top F&O loser also for the day. Amar, on the charts, technically, would you advise taking any fresh shots after the stock is corrected 4%?
No, I would say that Canara Bank is right now, it has corrected, but it's taking very strong support somewhere in the region of 220, 230 zone. It's currently around 253 odd levels or so. So yes, the trend remains down, but it's in extremely oversold territory on the weekly charts. And also on the monthly charts, if you look at it, it has got very strong support somewhere around 220, 25 zone. Currently it's around 253 odd or so. So if one wishes to short, then the level ideally should be somewhere in the region of 260 odd or so. That can be a good level to short with a stop loss above 266 and a target somewhere in the region of 235.
Okay. Those are some names to watch out for. Let's take stock of what dealing rooms are recommending in the session today on a day when we are looking like we will close in the green, led predominantly by some bounce back boys in the likes of Bharti Infratel, Eicher Motors and the others. So Darshan and Yatin will be joining us any moment to talk about what is it that their dealing room sources are telling them. In fact, we do have Darshan with us, so let's start off what dealing rooms are recommending. And Darshan, let's start off with you. What are you hearing from your sources?
Yeah, so the biggest gainer on the F&O side today is Reliance Infra. It's up almost 7% in trade. The buzz that we picked up from dealing room is that there will be a fund infusion likely. And the company that will infuse fund is another listed company, one of the largest companies in India. So that's the buzz. We aren't confirming this, but that seems to be the buzz that's moving out on Reliance Infra. Even Raymond is somewhere. Some of the HNIs are actively accumulating. It's more of a positional trade that some of the HNIs have started taking on Raymond. And the last stock that dealers are talking about are the aviation stocks, Jet, Interglobe, as well as SpiceJet. They believe that the worst probably is over. Again, concerns of engines are overdone on Indigo, and that's why it's up almost 2%. But aviation as a pack is seeing accumulation by some of the domestic mutual funds. But Yatin, what are you hearing?
Well, Darshan, Marico, that stock is in focus, and we have seen recently the copra prices come off, which is a key raw material for a company like Marico. So, on the back of probable soft copra prices, we have seen some good bounce back coming in for Marico. Of course, that might result into good margin expansion. And after the recent weakness, we are seeing some good bounce back as far as this stock is concerned. So dealers are bullish on this one. India Bull Real Estate also, there has been talk of corporate announcement very, very shortly. So there is some dealer interest on the positive side, and they are expecting a short-term 10 to 15% upside in this real estate stock. And watch out for L&T Finance Holdings. Dealers are indicating that the weakness is expected to continue on the back of fund selling, and that is the reason why dealers are recommending a STBT kind of a strategy.
Interesting. Thanks a lot for that, Yatin, as well as Darshan. STBT strategy, dealers recommending on L&T Finance Holdings. Amar, you want to dwell on that for a bit? NBFCs have been a mixed bag today. L&T Finance, though, looks slightly wobbly. Is there a trade here?
Yeah, L&T Finance, if you look at this particular counter, I would say that overall the trend from the medium term as well as the short term, that continues to remain bearish. So any pullback, yes, that can be used as a shorting opportunity, but not at the current level, because it has already corrected from 157, 158, and currently it's around 153, 154. Even on the long-term charts, it is showing some signs of weakness right now, but the long-term trend, however, still remains positive. So any pullback towards 156, 157, that can be used to initiate a short position with a stop loss above 161 and a target somewhere in the region of 147 to 148.
Mr. Chokalingam, stocks like Vindhya Telelinks and Bombay Burma, which you highlighted, have been your long-time favorites in the mid-cap space. But anything besides these two stocks or anything in the large cap, considering the correction that we've seen, you're doing some value picking?
Yeah, certainly. One can look at HPCL. On a consolidated profit basis, it is trading at around 7 PE. I firmly believe that the oil price ultimately would correct, because US has deployed a record number of oil rigs, and therefore it should moderate the global oil prices, and that should be positive for HPCL. And as I mentioned, the automobile population is continuously growing in the country, which is giving you a solid, consistent growth in the fuel offtake from the pump stations. So that is also positive for HPCL. I'm pretty confident that the dichotomy, or rather, sorry, the unbelievable cheap valuation of HPCL would certainly correct one day. So therefore, in the large cap space, I would strongly recommend HPCL.
Okay, HPCL among the oil marketing companies is the recommendation coming in from Mr. Chokalingam. Amar, we've seen some good build-up for Indigo in today's session. The counter has been trading with gains of 2 to 2.5%, but the futures also indicate there are some fresh longs being seen. If you look at the charts, is there any fresh trade can someone take? Or let's say if somebody's already initiated a long position here, what should be the target?
Yeah, overall looking at Indigo, what Indigo has done today, that it opened lower and then it has bounced back and it's almost up by 2.5% as of today. What we see is that it has taken some very strong support around 1200 odd levels or so, because that's and the long-term trend for this stock remains positive. And even if we look at the intermediate term trend, that also is positive for this stock. So any pullback is to be used as a buying opportunity. It did have its own some issues with regard to the engines, but maybe the market is trying to discount that. But on the upside, what is seen is that somewhere in the region of 1260, 1270 immediately, that's going to be a resistance zone. So anyone having bought should ideally book profits, because it's likely to trade in a range, because till the time the stock doesn't really take out this 1270, 1300 zone, it's going to trade sideways. But it definitely has very strong support around 1200. So the range, what I see is for Indigo in the short term is anywhere between 1200 to 1300. That is the range that it would see. But on the downside, one should look at buying, because the long term as well as the medium term trend for the stock remains up.
That's interesting. And remember, I think this news that Bloomberg News has broken about their engine troubles and the replacements that they can get from Pratt & Whitney could also be helping the sentiment on Indigo, as also the Feb growth numbers. From what Somit told me earlier, Navneet, that Feb usually is a slightly sketchy month, but this time around the numbers have been very, very promising. So quite unlike what a usual Feb is, and YOY comparisons show that. So it's actually been a pretty decent month of February for Indigo as well. So that stock seems to be doing okay. And you're seeing, of course, some interesting activity in the F&O side as well.
Yes, and it's also snapped the 4-day losing streak. I'm sure there are multiple factors playing out. One could be the traffic growth numbers, 24% higher for the month of February, and also the news story that we just broke. If they can get their engines replaced, finally things would be working well, in fact, for the month of March as well. But 10 minutes for markets to close. Let's get you some closing strategies from our technical experts. Sacchitanand, any BTST or STBT?
Well, the volume action in L&T is looking good. In fact, the way it has been stabilizing near this support zone of around 1285 and the rebound that we have seen, I think there's a good chance that we may see a good revival in the stock. 1320 is the probable target. A stop loss can be placed somewhere close to 1282.
Okay, Amar, what about you?
Yeah, there's one stock one can look at buying, that's Bharat Finance. It's overall the trend across different time frames remain positive, and if you look at the stock has not corrected in spite of the market witnessing a steep correction. So clearly reflecting that the stock has inherent strength. So any pullback towards 1060, that can be used as a buying opportunity, with a stop loss of 1049 and a target of 1110 on the upside.
A bit of a bounce in sugar today, though I would reckon that you could argue that it's a dead cat bounce, simply because while the export duty has been scrapped, it was not completely unknown. Mr. Chokalingam, the space is reeling under pressure. Cane dues are mounting. There's a bit of a curve or regulatory push that has come in, and this is not the first. Can the regulatory pushes help revive and let the sector survive, or you would let it pass?
Sector would survive, but investors would not be able to make money in the short term. The pain would continue. As you rightly said, the arrears are around 14,000 crore. It is going to mount. And in fact, Bloomberg Global Media has reported that there will be about 11 million tons of surplus sugar in the global market. And in fact, very interestingly, they mentioned that three people, 3 cakes can be given to every individual on the earth using this surplus sugar. So that is a magnitude of surplus sugar available in the global market. So I don't think any amount of encouragement to domestic producers will help us in improving the export of sugar in this market condition. So the price fall also, it's more than 30% year-on-year basis in the global market, and domestic market also it is down more than 20%. So the pain will continue in the short term. Only in the long term, beyond 1 year, 2 years, if somebody wants to make money, then they may start investing slowly in most efficient sugar producers who have got a strong balance sheet and own cash to finance inventory, something like KCP Sugar one can try. Otherwise, short term, I would suggest staying away from the sugar stocks.
That's interesting though. This news bit on the screen is interesting is what I'm saying. Amtech Auto is saying that the Liberty House's resolution plan has not yet been approved by lenders. Well, interesting. It seemed to be a done deal from an asset perspective that Liberty House would probably be the first of the winners in this entire process. Everything else is marred under some bit of an issue or the other. Now we learn that even this one could have issues. So Liberty's plan has not been approved yet. This is a word coming in from Amtech Auto on the exchanges, I presume. That shouldn't augur well for the stock. It was the only bidder, if I'm not wrong, in Amtech Auto was Liberty House. We learned that even their plan has not yet been approved. Not that really, I don't think too many people are interested in the stock of Amtech Auto. It's important from a process perspective and the resolution that we're seeing in a bunch of these stressed assets across the country. Let's wait and watch what happens here.
Well, a bounce back also seen for the markets, Neeraj, 10,136 on Nifty. So finally, we'll be closing with good gains of nearly 40 to 45 points. Bank Nifty recovered from the day's low, but it is still trading in the red around the levels of 24,200. Amar, a sharp bounce back for stocks like JSPL, Steel Authority, even Tata Steel among the large caps has seen a move of 3% today. Anything in the metal space where one could initiate a fresh position?
I would say that from that perspective, Tata Steel SAIL looks good because SAIL is extremely strong on the long-term charts and it has taken some very strong support somewhere around 68. So that support doesn't seem to be likely to be breached in the short term. And also it's moved in the oversold territory across the other different time frames. So any pullback in SAIL towards 70, 71, that can be a very good buying opportunity with a stop loss below 68 and a target somewhere in the region of 76, 77 on the upside.
Okay, and the top gainer among the Nifty constituents today is Bharti Infratel. Sacchitanand, if somebody is holding long positions here, should they be booking out their profits or they should hold on?
No, I think if you look at the overall structure on the weekly scale, the stock is still stuck in a range of around 350 on the higher side, and on the lower side 320, 325 has acted as a good support. So right now what we have seen is just a rebound from the lower side of the band. So I think one should maintain their long positions. Once we have a sustained breach above 350 levels, there could be a substantial run towards say 385. So I think it's a good idea to hold on to this particular counter. In a very resilient market, this particular stock has been outperforming. So I think 320 should be a stop loss for the trade on a closing basis, and one should anticipate or expect this particular move to eventually break out from the entire band. And once we have a sustained move of 350, the extension could lead it towards 385. So I think it's a hold. Stop loss can be placed around 320 on a closing basis.
Okay, so hold on if you've taken any sort of long position on Bharti Infratel, which is your top gainer on Nifty. Well, just few minutes for markets to close. Let's head across to Neeraj to find out how exactly the closing today is panning out. And Neeraj, some respite. We're snapping the 4-day losing streak today.
Yeah, not going to four figures as yet. Yeah. As yet is very, very important. Let's wait and watch if we even do go or no. But yeah, 0.5% or thereabouts for the Nifty, not a bad day. The Nifty Bank too, while volatile and was trading almost 0.7% down sometime in the last half an hour, 45 minutes, is actually not closing all that poorly. So it's been a decent day of trade. Actually, sorry, let me get the mid caps and the small caps too on the screen. I'm in a bit of a hurry today. Just looking at the green on the screen. The mid caps, 0.5%, small caps, about 1/3%. It's not turned out to be a bad day, even though the market breadth may have looked slightly wobbly. All in all, it's turned out to be a good day of trade. Let's look at individual names. And quite unlike yesterday, a fair bit of green on the screen. Tata Steel, Hindalco, SAIL not from the Nifty really, but that metal space is making its presence felt today. Pharma has bounced back in a manner of speaking. So Sun Pharma, Dr. Reddy's, Cipla, which was down and out, has also picked up some steam. And then IT has been strong throughout the trading day. So Infosys, Wipro, TCS, a couple of others outside. Tech Mahindra, not on the Sensex, but on the Nifty, is doing really well for itself too. And not too many losers. Maybe a couple of private banks, the ICICI, yes, and the Kotak Mahindra Bank and HDFC Bank. So private banks are under a small spot of selling today. Nothing too alarming, but that's probably that only clutch of names which has looked weak in trade. What about the broader markets, Navneet? And we'll probably get a sense of whether the breadth has improved or no, but fair bit of activity nevertheless.
That's right, Neeraj. We had certain stocks which were beaten down and they bounced back in today's trading session. I want to start off with EIH Associated. That stock came off its high levels that one has seen in the last 2 to 3 weeks. So finally, EIH today closed with gains of nearly 11 to 12%. Dhanalakshmi Bank was surprisingly pretty active in trade, and that also saw gains of nearly 10 to 11%. As you can see the chart on your screen, closing around the day's high mark. Marico, we don't see that sort of activity in this counter on daily basis. It's also in the derivatives market. Huge amount of surge was seen in terms of open interest build-up for March futures. So fresh longs were seen for this one, up 5%. Stocks which have been beaten down in the recent past, like Reliance Infra, they bounced back today. So Reliance Infra made registered gains of nearly 6 to 7%. Metal counters, Steel Authority, Jindal Steel and Power also recorded good gains in today's session. And NIIT Tech, a counter which was seeing profit booking in the last 2 trading session around the mark of 900. Once again, that buying emerged and huge amount of OI build-up seen. So fresh longs once again emerging for NIIT Tech. On the losing side, couple of stocks. Rani Holdings was pretty weak, so that saw cuts of nearly between that actually closed at day's low, but there was a bounce back towards the end of the session. Gujarat State Petronet was also pretty weak, and the graphite makers which were active in yesterday's session, Graphite India as well as HEG, both of them saw some bit of profit booking and they were down in today's session. From the Realty pack, DB Realty was down nearly 4 to 5%, Neeraj.
That's all in all, not a bad day of trade. This is the picture at close, and fair bit of green on the heat map. I'm certain about 0.5% higher for the Nifty 50. The heat map should come up on your screen. It was even Stevens or slightly better, and now you see a fair bit of green on the screen, and dominated by, as we've spoken about, some of the tech names and commodity names. The contributors will come up, and save for maybe a Reliance and the private banks, there were not too many losers. Yeah, so ICICI Bank, Reliance and HDFC Bank, those bring up the losers list. Not too many stocks otherwise. Here, IT gave a lot of support. So Infi, TCS, Tech Mahindra on the Nifty has led predominantly the gainers list. There were some metal names out here, but obviously not heavyweight enough to feature in this list. HDFC, the principal contributor, up about 10 or contributing about 10 odd points. I'm interested in the market breadth though. At the start of the show, it was firmly in the red, just a bit of a convergence towards the close, still 2:3 in favor of the declines. It doesn't look like the breadth of a day that we've had today, Naveen.
Right. Neeraj, I guess the most active mid-cap stocks which were beaten down bounced back, but overall the market breadth remained weak because there was no fresh buying which is being seen in the markets. Even if you look at your large caps among the Nifty constituents or the mid-cap stocks, majority of them maybe could be seeing, you know, some bit of short covering in today's session.
Yeah, and the cash volumes too, as was the case yesterday, I think not too buoyant. Just before we get the final comment from our guest, just bring up, actually we'll get the European markets anyways with our London correspondent as well, but just get maybe what the world markets are up to. Oh, they've come off a little bit from the levels that they were trading at. So, well, a dull day for the European markets as well. Anyways, final thoughts from all our experts, and Amar, to you first. Considering what we've done today, is it a determinant of what could happen over the next few days, or it's very difficult to predict any kind of upsides to these markets right now?
I would say that the low that Nifty made today, that should really hold. And also taking out that low or the 10,000 psychological mark would have a serious negative impact, could have a serious negative impact on the market. So I would say that the market could go in for some consolidation. But yes, on the upside, again, 10,200, 250, that's going to act as an immediate resistance for that. And the market will try to reach out to that level as well. But what we need to remember is that we have the FOMC meet also today and tomorrow. So that is going to have an impact on global markets and our markets. So that would be one of the drivers impacting our markets. But technically speaking, 10,000 to 10,050 should act as a short-term support. And on the upside, 10,200 to 250, that would be an immediate zone of resistance.
Sacchitanand, what about you? Your closing thoughts? Let's say if we get another gap up of 20-30 points in tomorrow's session, how would you use that?
Well, as we discussed, if you look at the 180-minute scale, which is the intraday scale of Nifty, it has been escalating within the downward sloping channel. And today, we have respected the lower bound of the channel and it has moved up. So I think the next trigger from here on where the confirmation may set in is around 160. So 10,160, if you look at this particular level in tomorrow's session, and if Nifty manages to hold this particular level, then probably we may see a good short covering rally, which may lead the Nifty towards say 10,400, 360 zone, which is the upper end of this particular sloping channel. So we are optimistic right now. I think 10,050 is one particular level that should hold on. In case if this particular level is violated, then the psychological level of 10,000 may also breach on a very severe note, and we may see a substantial drag on the index. But I think so far the closing is healthy. The next trigger is 10,160. In case if we see it, managing tomorrow's trading session above this particular level, probably we are in for a short covering move towards 10,400 then.
Okay, Amar as well as Sacchitanand, many thanks, gentlemen, for joining in today and giving us that perspective. Mr. Chokalingam, a common space that is turning out amongst all guests who have come on the channel in the last few days is cement. Almost everybody is coming out is saying that that's one space that they're bullish on. Are you bullish as well? And if so, what stocks within this pocket do you like the most?
No, unfortunately, I have not started picking up the cement stocks. Of course, I agree with you. The kind of valuation people are chasing for Binani cement, it gives a lot of confidence. But the volume sales, is still in poor single digit. So one has to look at some cement idea which could be up for sale or acquisition. That's the only way to make money in cement space, not in terms of earning and valuation comfort. So I am still on the job of completing this. So maybe later a few days I would definitely share the idea.
Okay, I guess Shree Cement was pretty active in today's session. That counter saw gains of nearly 2 to 3%. Mr. Chokalingam, we'll leave it at that note. Thanks a lot for joining us today and taking us through your thoughts on the markets. Well, we'll slip into a short break. Don't go anywhere. We'll be back with more on the other side.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange. White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
back. You're still watching Countdown with us on Bloomberg Quint. Well, talking about our coverage of the Valrum conference, where we've been interviewing a lot of managements. On the sideline of that, Raghav Kanoria, MD of IPCL, joins us now. And we also have Jayesh Khilnani from our research desk to take that conversation forward. Jayesh, over to you.
Thanks, Navneet. Mr. Kanoria, my first question to you is on the revenue front. So for the 9 months, you have done about 300 odd crores on a standalone basis. What is it, likely number that you will end the year with?
No, so the first 3 quarters, actually we come out with our quarterly results only on standalone. Because we show us consolidated only at the end of the year. So, just sorry to clarify, I was actually talking about the consolidated when 750 number was mentioned. So, if I look at on an annualized basis, a consolidated would be at a similar level or slightly higher.
Now, Mr. Kanoria, there has been a significant margin contraction in the recent quarters. What are the factors that have contributed for the margin contraction?
I think, again, being a regulated business, we do not have much control on the margins, because we have fixed tariffs which are decided by the regulator, and we sell power to customers at those tariffs. So there are certain regulatory adjustments which happen at the end of the year based on orders of the regulator, which generally come towards the end of the financial year. So there are certain revenues which we realize and recognize in our books based on the regulator passing orders, and until they pass these orders, we can't recognize that in the books. So again, it's a fairly regulated business. I think our profitability and margins would be in a similar range as it has been in the last few years. There shouldn't be any drastic changes, in my opinion, unless there are some major expenses. So I think it's a fairly regulated business, shouldn't have too much of volatility.
And what is the current debt on your books, and how do you intend to bring it down?
Again, at a standalone basis, the distribution company, because it's not very heavy on debt, we have close to 400 crore long-term debt and a net worth of around 1,000 crore. The generating assets which are getting commissioned, they of course are larger investments which will have more debt, but as and when it is consolidated, I think the numbers would be available. But overall, I think we would still be below 1 debt equity ratio, 1:1 debt equity ratio, which would be quite a comfortable range for a company in the power sector, both in generation and distribution combined.
Sure, Mr. Kanoria, we'll let you go on that note. Thank you so much for taking the time out and speaking with Bloomberg Quint. It's back to you guys in the studio.
Well, thanks a lot for that, Jayesh. So that's the one more management as well out of the Valrum conference. Let's shift focus to global markets. European stocks have come off their opening highs. Let's go across to Sandra Kilhoff, who joins us right now from the studios in London to talk about the same. Sandra, when we started the show, the Indian show, an hour and a half ago, it all seemed okay. Somehow they come off a little bit from the highs.
Yeah, you're right. We're seeing the European equities pairing those earlier gains. Investors really much weighing the latest headwinds to technology companies, preparing for a series of potentially market-moving events this week as well. Yesterday's tech sell-off in the US sparked by a series of negative industry stories, including Facebook's data issues and a fatal accident involving an Uber self-driving car. For European markets, this has resulted in a rather mixed bag today. We've got the Stock 600 down about 0.1%, while Germany's DAX is trading trading flat at the moment. London's FTSE 100, however, up 0.2%, paring some earlier losses. Now, stocks to watch today do include Glencore and Rio Tinto. That's after Glencore bought Rio Tinto's Hale Creek coal mine in Australia for $1.7 billion. The Switzerland-based firm has agreed to buy Rio's 82% interest in the Queensland mine, as well as the company's 71.2% interest in the Valeria coal mine. Rio Tinto has rallied about 0.7% on that news, while Glencore is trading down following earlier gains. Meanwhile, if we take a look at fixed income, Germany's 10-year yield has risen 2 basis points to 0.59%, while 10-year gilt yields have gained more than 2 basis points to 1.467%. In currencies, the euro has dipped 0.1% to 1.2325, while the British pound is gaining today, currently up 0.1% against the dollar, pairing earlier gains where it was up about 0.3% at one point. This as the UK inflation rate actually fell more than expected in February. Consumer prices rising 2.7% from a year earlier, according to the ONS. That's down from 3% in January.
Thanks a lot, Sandra, for bringing that wrap up from the European markets. But going back to Indian markets again, Force Motors has just entered into an agreement with Rolls-Royce to manufacture motor engines in India. These engines are used to power rail engines and even in the power sector. The company's MD, Prasanna Firodia, says the initial plan is to invest nearly 300 crore to get the plant up and running by the middle of next year. Listen in.
This will be truly make in India. This engine will be produced in India. We will buy parts in India. We will machine parts in India. We will build the engines in India for, of course, the India and the neighboring countries market. And Rolls-Royce Power Systems will, globally sell this engine through their network all across the world.
And what is the kind of revenue visibility that you're expecting through this JV?
So in the short term, we expect this joint venture to give us approximately 1,000 crore plus revenue.
In the short term, as in, could you give a timeline for like a year?
Short term is normally short, so in the next 3 to 5 years.
In the next 3 to 5 years, thank you. And what is the initial investment, and are you going to scale it up to what maybe?
So the initial investment signed by both the boards in step 1 is 300 crore rupees, and as we go forward, as we look at different segments or opportunities, we will take a call on future investments.
So right now, what are the opportunities you're completely focused on, and some other opportunities that you think can open up in near future?
I can only tell you what has been signed off for now. So the priority 1 segments that we will focus on are power generation, India and globally. Second opportunity we will focus on is railways, because these engines currently are going into railways. And India being the country that will produce this engine for global requirements, these 2 segments will definitely continue.
What is the timeline that you're looking at for production?
So we will start the construction of the new facility. This will be a plant which will be built to exacting standards defined by Rolls-Royce. This facility should be up and running by end of 2019, next year.
Sure. Now moving to Force Motors completely, could you tell us what is the product pipeline that we are looking at for FY19?
So we have 2 completely new platforms coming out between this and next calendar year. We have a new bus coming out, which will take us into a much bigger market segment to operate in, which will be 33, 43 seaters.
Okay.
We are also coming out with a complete new platform on our utility vehicle range. So both these platforms will come out between this and next year.
And you're seeing some good traction in the LCV segment. So what is the strategy to improve the market share in the LCV segment?
So as you know, our product already is a market leader, the Traveller. We have in excess of 65% market share. The objective will be to, take this product into multiple applications. The Traveller is a very application-friendly product. We have, hundreds of applications that we currently produce on this. We are looking at creating newer and newer applications. We are extending the wheelbase. We are also coming out with a new platform, so that will give us more market opportunity to play with.
And finally, FY18 wasn't particularly good in terms of sales. So what were the challenges in FY18, and how do you think FY19 is going to be? Any outlook for FY19?
FY18, we had multiple challenges, external influences which are beyond our control. We had demonetization, we had the transition from BS3, BS4, we had the most recent, the GST implementation. So all these things created several hiccups. Sales were going up and down, so that created the sluggish numbers. Things have settled in now. Things are settling down. We still have some challenges on taxation on our products. We are taking it up with the government as soon as those taxation issues are resolved. Overall, we feel the next year to be a much positive year.
And how would you close FY18? Any outlook on that?
We expect to close anywhere in excess of 10% growth over last year.
Okay, as we wrap this edition of Countdown, let's bring you an exclusive conversation with Prince Al Walid bin Talal. Speaking to Bloomberg, the chairman of the Kingdom Holdings talks about his house arrest and the subsequent agreement with the royal family. Listen in.
Why were you in the Ritz-Carlton for so long?
Well, you have to ask the government, not me, frankly speaking. I don't believe I belong there at all. So, I am always, almost always in agreement with my government, but not necessarily all the time. For example, I give advice to the government in certain incidents and certain cases, and sometimes they listen to me, and sometimes they don't. It's like they give me advice on certain things, and I listen sometimes I don't. So there's an interaction between me and the government continuously. Now, on that particular subject, I don't believe I should be in there. Yet I'm there. I respect the government. I accept what they said, and I'm under the support of Saudi Arabia, under the King and Crown Prince.
What did the government want from you? Did they ever make that clear?
Well, I will not dwell into the discussion that took place between me and the government of Saudi Arabia and through the representatives.
They must have wanted something, though.
No, I read what was written. That they want a chunk of A or B or C of what I have. And this was all rumors.
According to one report, it was $6 billion.
Oh, yes, I read $6 billion, I read more than that, less than that, I understand that. Though, frankly speaking, all these are rumors, but I will not dwell into the arrangement between me and the government.
Did it cost you anything to leave?
I will not comment on the content of the agreement between me and the government.
No, but what I'm asking is, did you have to pay the government any money? Did you have to hand over any land? Did you have to surrender any shares?
When I say it's a confidential and secret agreement, an arrangement that is based on confirmed understanding between me and the government of Saudi Arabia, I have to respect that. And look, I am a Saudi citizen, right? But I'm a member of royal family. The king is my uncle. Mohammed Salman is my cousin. And this is the rule of Saudi Arabia. King Abdulaziz, established Saudi Arabia, correct? So my interest is really to maintain this kingdom of Saudi Arabia, and obviously my kingdom also, and to maintain the relationship between me and them, and have it, unscratched completely.
You understand, of course, why I'm asking this question. Sure. There are people, fellow detainees, who signed settlements and paid large fines. I want to know whether you're in the same boat or whether you're in a different camp.
Oh, look, that's why I didn't want to be in that case, because some of those people were there. I'm not going to name names, but I know them. 1, 2, 3, 4, 5, 6, 7, maybe quite a bit of them, that they really did commit crimes of theft. And they were involved in bribes, and they were involved in stealing funds from the government. We all know them very well. I know them. And I'm for having these people there. And I am for the anti-corruption that took place in Saudi Arabia. Now, unfortunately, I was added to that group. But fortunately, I'm out of it right now, and life is back to normal. So I'm not the person who's going to come and say, I forgive, I forgive, but I don't forget. I say I forgive, and I forget at the same time also.
I also want to know if you retain control of your companies, whether you're still a 95% shareholder in Kingdom Holding, whether you still own Rotana, your media company, whether you're still in full control of your personal investment portfolio.
Let me assure you, look, I'm at Kingdom Holding, I'm the chairman. Obviously, I did give the power to our new CEO, Talal Miman, more than a year ago. And also I empowered the Al Walid Philanthropies leader over there to manage the process, and my private office and Rotana. So they all have been empowered long time before I went to the Ritz. I'm really the chairman, like the only chairman, frankly speaking, of all of them. And they're all functioning as usual. Even when I was in detention, they were still functioning. And there is a blessing in disguise, really. It was a conclusive proof that all these operations, whether it's Kingdom Holding, or the Alwil Philanthropies, or my private office, or the Rotana, they're functioning as normal as possible, even in my absence.
But are you still the controlling shareholder?
Well, look, very simple matter. You can go, look, Kingdom Holding is being publicly traded in Saudi Arabia. And Saudi Arabia is part of G20. And our stock market is very transparent, actually as transparent as the United States. So please, you can go to the list of holdings, and you look there, how much is my holding there? You know, you can see it's 95%. So you go there, you see what is right now, and you can verify that independently.
Your Royal Highness, you maintain your innocence. You say that you didn't sign a settlement acknowledging guilt, and that you are different, if you will, from many of the other people.
No, but we signed a confirmed understanding.
Yes.
And I say we have signed something, yes, confirmed understanding. I don't call it settlement. Now, some others may call it settlement. I don't call it settlement, because settlement, to me, is an acknowledgement that you made a wrong. You made something wrong. In my case, no, it's a confirmed understanding with the government.
You realize, of course, how important it is to be candid and honest with me about this.
That's why I'm with you now.
Because the circle of knowledge is too wide. Too many people know too many things. And if all of a sudden a different story emerges, your credibility will suffer. So everything we're saying,
you bet,
everything you've told me is 100% true.
I have a confirmed understanding with the government, and it's ongoing. Now, I elaborate on that. It's an ongoing process with the government.
What was it like, Your Royal Highness, being held captive by your own cousin?
Frankly speaking, it was not easy. You know, I have to confess that. It's not easy to be held against your will in a location. But I used to say, you know, look, this is your uncle, this is your country, and this is your cousin, Prince Mohammed. And really, when I left, very strange feeling I had. And I met with I gathered all the seniors of my companies and all my close confidants. And I told them, I swear to you, I have complete serenity, complete comfort, and no grudge and no bad feelings at all. And sure enough, within 24 hours after I left, we were back in communication, you know, with the King's office, with the Crown Prince and his people. And that's a very strange situation, by the way, not easy for it to happen, but it's a fact.
And that's because what? That's because you simply had to move forward?
No, look, I'm a nationalist, I'm patriotic, I believe in my country. Look, this country has been established by the Al Sauds, you know, by my great-grandfathers. This country was done and established with our blood, with our grandfather's blood. So I'm not going to come and have this irritation that happened to me, you know, really, and to create a vendetta in me against my uncle, my cousin, and my nation, and my people in this country.
Did you see Prince Mohammed or King Salman at any point while you were in the Ritz-Carlton?
No. During the Ritz-Carlton detention, no, I did not see any of them, but I was in direct contact through their people, yes. So I had a few representatives that goes to report to them directly.
How would you describe your relationship?
You know, no one believe it. After I left, it is not only as strong, it's stronger. And this is shocking to many people, even to my people, not only to you. I told them, my relationship right now with Prince Mohammed bin Salman, this guy, is not only as strong as before, stronger. And this is shocking to many people.
You've forgiven him?
No, I didn't say forgiven. I forgot and forgiven the whole process completely. It's behind me. Completely. Completely.
How often are you and he in contact?
Barely 3 days come without me texting him or calling him or talking to me. Barely 3 days happen.
You and he talk almost every 3 days.
I say we text a lot. We text a lot, but we talk less frequently. But barely a week goes without us communicating. Basically 3 days end without us communicating.
What about your profile, domestically or internationally? Will that have to change?
No, but you know, some you know, thanks God, many of the companies I deal with, and many of the banks I deal with, you know, they all been in touch with me, and I really take this opportunity to thank many heads of state in Europe, many heads of states in the Arab world, many heads of states in the Far East, and many ex-heads of states in the United States, really for caring about me and being in touch with my office and with me after I left and during my detention. I really thank specifically, you know, Warren Buffett, Bill Gates, you know, Lloyd Blankfein of Goldman Sachs, Corbett of Citi, and you know, President Carter.
They checked in on you.
Oh yes, and actually Bill Gates issued a press release about me. So I really appreciate, please, and I miss a lot of my friends here, because I have no time to mention all the names. So I really appreciate what they did, all those in the political arena, national, region, internationally, and in the business community also. So I really thank them for their care about me, and say I will never let you down.